If you or a loved one are living with a prolonged physical or mental impairment, you've likely heard about the Canadian Disability Tax Credit, or DTC. But the number one question we get asked every single day is, exactly how much money will I actually get back? The truth is, it's not a single flat rate. Because the DTC is a non-refundable tax credit made up of both federal and provincial components, your actual refund depends entirely on where you live, your taxable income, and how many years you are claiming. To take the guesswork out of it, we built a free, interactive disability tax credit calculator to estimate your potential payout in minutes. Now, keep in mind, we also have a comprehensive written guide linked right down in the description below. I highly recommend referring to that guide for deeper information, as it includes specific real-world examples, historical tax formulas, and detailed diagnostic criteria that we can't fit into a single video. Today, we're going to walk through how to use this online tool, map out the technical expectations of the CRA, and take you step by step through the actual application process so you can secure the maximum refund you're owed. Let's look at how your province and personal timeline radically change your retroactive back pay. Every year, the federal government sets a base credit amount, but your province adds its own provincial credit on top of it. Because of this, a claimant in Ontario might see a completely different total refund than someone in Alberta or British Columbia, even if their medical condition is identical. To give you an accurate estimate, our calculator doesn't require you to dig through old tax returns or input your taxable income. Instead, it asks for just 4 simple things: your province or territory to apply your local tax rates, the year your impairment started, so we can calculate up to 10 years of retroactive back pay, the condition category that best describes your impairment, whether that's walking, mental functions, or vision, the year you were born, which is crucial because the CRA adds a massive financial supplement if the claimant was under 18 during the claim years. Once you input those quick details, our tool automatically calculates your estimated payout. From there, if you want a deeper look at your specific tax history, you have the option right on the page to book a completely free assessment with our team to map out your next steps. Before you dive into the paperwork, you need to understand the CRA's technical expectations. The CRA does not grant approval based on the name of your medical diagnosis. Instead, they look at the functional impact the condition has on your daily life. To qualify, the impairment must be prolonged, meaning it has lasted, or is expected to last, for at least 12 continuous months. Furthermore, you must face what the CRA calls a marked restriction in at least one basic activity of daily living, or a combination of significant restrictions across multiple areas. Essentially, the impairment must affect you at least 90% of the time, making activities like walking, dressing, feeding, or mental functions take an inordinate amount of time, even with therapy and medication. If the calculator shows a substantial potential benefit and you meet those criteria, it's time to pull the paperwork. The only official document you need to kickstart this process is Form T2201, also known as the Disability Tax Credit Certificate. You can download a clean, completely accessible, print-ready PDF version of this form directly through the link in our description, or straight from the official CRA website. Make sure you always grab the most up-to-date version of the form, as the CRA updates its technical formatting periodically. Form T2201 is divided strictly into 2 sections, Part A and Part B. Let's break down exactly how to handle them. Part A is your section. This is where you fill out the applicant's personal details, including name, social insurance number, and date of birth. Crucially, Section 3 of Part A asks if you want the CRA to automatically adjust your previous tax returns if you are approved. Always check yes here. This tells the CRA to automatically calculate and issue your retroactive back pay without making you file separate adjustments later. Part B must be completed entirely by a certified medical practitioner. This can be your family doctor, a nurse practitioner, an occupational therapist, or a psychologist, depending on the restriction. Pro tip: do not just hand this blank form to your doctor. Sit down with them. Ensure they clearly describe how your condition restricts your daily life in the text boxes, explicitly reflecting that 90% impact rule. Vague medical descriptions are the #1 reason applications are denied. Once Part A and Part B are fully signed and completed, you have 2 choices for submission: digital or paper. If you prefer the traditional route, you can mail the physical paper copy directly to your regional CRA tax center, which is listed on the back pages of the T2201 instructions. However, we strongly recommend submitting digitally. If you log into your CRA My Account portal, you can use the Submit Documents feature. Simply scan or take a clear, high-quality photo of your completed Form T2201 and upload it securely. Digital submissions drastically reduce processing time, minimize the risk of the form getting lost in transit, and give you an instant tracking confirmation number. Let's rapidly fire through 3 of the most common questions we see on our calculator page. Question 1. What if I have no taxable income? Can I still benefit? Yes. If you don't have taxable income to offset, the credit is underutilized on your account. However, you can officially transfer the credit to a supporting family member, like a spouse, parent, or child, who helped provide you with basic food, shelter, or clothing. Question 2. How long does CRA approval take? On average, once the CRA receives your form, it takes between 14 to 16 weeks to get your official notice of determination. If they require clarification from your doctor, it can take longer. Question 3. Does an approval last forever? Not always. The CRA may grant it indefinitely, or they may approve you for a fixed period, say 5 years, after which you will be asked to reapply to prove the restriction is still present. Applying for the disability tax credit can feel daunting, but knowing what you are entitled to is the very first step to securing your financial peace of mind. Click the link in the description below to head over to our site, use the Disability Tax Credit Calculator, and read our deep dive written guide. If you found this video helpful, please hit that like button. Subscribe to the Disability Credit Canada channel for more clear updates on Canadian benefits, and drop a comment below if you have any questions. Thanks for watching, and we'll see you in the next guide.